Welcome back, everyone. Next, we have Stillwater Critical Minerals. It trades on the TSXV under the symbol PGE and on the OTCQB under the symbol PGEZF. It's a mineral exploration company focused on its flagship Stillwater West Critical Minerals project in the iconic and famously productive Stillwater Mining District in Montana. Please welcome President and CEO Michael Rowley. Nice to see you, Michael. Welcome back to the conference.
Thank you. Glad to be back.
All right, the floor is yours. Call me back when you're ready for questions.
You bet. Thank you. Well, thank you all for joining us. Stillwater Critical Minerals, talking about the future of U.S. critical mineral supply. And we have, as mentioned, we are doing that from a district that is known for critical minerals production reaching back over 100 years. That was a forward-looking promotional statement, and I'm sure I'll be making additional forward-looking and promotional statements. Strategy, give a high level of the company, and then we'll focus on critical minerals, what they mean, and then the Stillwater West project, of course, in Montana. As mentioned, we are focused on Stillwater West in Montana. That is largely the reason that Glencore has an invested 15.4% equity position in us. For all the reasons that we'll get into, this is a very compelling asset, and we're very glad to bring Glencore in. Being one of the top 5 miners in the world, the largest by revenue, and one with significant depth of knowledge in nickel sulfide mining. Stillwater West is the largest nickel project in an active U.S. mining district, and that means we've attracted a lot of government interest as well as Glencore. In addition, we have 8 other minerals that are listed as critical in a polymetallic co-product capacity, and that is further compelling as well. We also have interest in 4 other projects. 3 in total projects are district scale, and we'll touch on why that's significant. Kluane in the Yukon, we have a district scale critical minerals project, earlier stage than our work in Montana, but compelling nonetheless. And then Drayton Black Lake in Ontario, gold project, which a company called Heritage Mining is earning into. This gives us good exposure to the gold space while they earn into our project. Stillwater West is very much driving things here. 1.6 billion pounds of battery metals, 3.8 million ounces precious metals and gold, PGMs and gold, in a really world-class district and with exceptional expansion potential. Broad view of our presentation today. We will talk about timing and the importance of timing. As you probably know, commodities markets are cyclical, and timing is key in that regard. So we'll talk about the broader backdrop of market timing, and then within that, what it means to be a growth stage exploration company and the importance of timing in that regard. Critical minerals, what are they? Geopolitics and the need for domestic supply and the government push for domestic supply. And then us, Stillwater Critical Minerals. We've got scale and grade. We're in an excellent location. We built a fabulous team, and we have Glencore on board. And there's a nice picture of the drill in action and some of the sulfide-rich core that excites us in our day jobs in Montana. Timing, high-level view. Commodities are cyclical. This chart does a really good job of presenting commodities versus big board equities and the cycles that happen over decades. We've got another slide that shows reaching back to 1900 against the Dow. This one focuses 1970 to just about a couple of months ago. It plots the Goldman Sachs Commodity Index, the GSCI, against the S&P 500. And we see swings from commodities being extremely undervalued on the bottom part of the graph to commodities being extremely overvalued. And it just repeats from perhaps 1 to 9. Median value is about 4. And that's, we're well below that right now. And that's really the point. We've got significant gains to be made in the commodity space just to return to the median value. We are at a multi-decade cyclical low, and just in the past few weeks, that's showing really good indications of moving up. We've seen gold, silver, copper follow. Nickel and palladium are down, but their nickel has bubbled up nicely over the past 2 months. We're seeing a general return of interest to commodity investing out of real estate, out of big board stocks, and that's precisely what we wanted to see. Buy when there's blood in the streets, even if the blood is your own. Baron Rothschild on the importance of taking positions in things that are undervalued at the right time. Forget the FOMO and forget chasing things that are already on vertical and look for the next things that are going to go vertical. In our belief, that's commodities. And there's a number of analysts saying that. Within the broader picture of commodity investment is the mining space. And within the mining space are the stages of mining companies. This is a Lassonde curve. Many of you may have seen this already. It shows the valuation approximately of a mining venture as it moves from discovery through to a resource stage and then ultimately to feasibility studies and production. The investor base shifts, and ultimately with de-risking a project, you start to get the kinds of studies that show you what a mine would be like, and then ultimately production, and you've got a full-blown producer valuation. This gives two optimum entry points for investors. You've got that pre-studies growth stage, and then you've got the mine building stage, and either of those are optimum for value creation. We are nicely out of the discovery phase. We're off that riskier left end of the chart. We've got Glencore on board. We've debuted 2 mineral inventories now, and we're in world-class rocks with a world-class team. So for us, the story is very much about growth, growing those resources, and wrapping PEA studies, feasibility studies around what we have. That's a key point about this chart. It's pretty generic, and it sort of naively assumes that you're going to drill a hole, make a discovery, and advance it to a mine. Stillwater has been explored for many decades, and we benefit from having 205 drill holes drilled before we even got there. So we've already got a really good leg up in terms of that exploration. Discoveries, you could argue, were already made. They just maybe weren't interesting in the 1970s. As a result, we expect to move more quickly than this. Plus, we're in line to get government support. There's great U.S. government interest in our work now. In addition to that, this whole curve is in flux, and it's changing. Rising tide floats all boats, right? As interest returns to the commodity space and to our portion of the commodity space, we can expect this curve to swell, and that also accelerates everything. So we expect to do better than the timing that's shown here, and we think we're well positioned to do that. Critical minerals, what are they? The U.S. Geological Survey and the Department of the Interior have listed now 50 minerals that they deem as critical. These are defined by economic and national security interests and the fact that they're largely imported and prone to potential supply chain disruption. This means a lot of it comes from China or Russia or countries like this. And in the global backdrop now, you can no longer assume free trade with these countries. And in fact, China has even rattled the saber, shall we say, on the supply of certain minerals. This is only expected to get worse in coming decade. Tesla famously made a comment for mining more nickel responsibly. The U.S. is driving that home with the Inflation Reduction Act of 2022, which prioritizes domestic supply chain. It incentivizes consumers to buy EVs, for example, that have friend-shored critical minerals in the batteries. That's very positive for us. End users such as Hyundai have talked to us about their need for IRA-compatible nickel cobalt for their batteries. The Defense Production Act actually dates from 1950, but the government, U.S. government, has been using this extensively now to fund mining ventures and specifically drilling and expansion of U.S. resources, inventories of metal in the ground, and then the studies around those resources that will lead to a mine and production. All this is being done with a view to building U.S. supply chains of exactly what we have. And what we have proposed is not only world-class production in Montana, but also processing and work with these end users to make nickel, cobalt, other metals that are ideal for them and keep as much of the value as possible within the U.S. Why is it so important to have that domestic supply? The shift to green energy is increasing the demand for critical minerals. That's unavoidable. There's not enough metal in the pipeline to complete the transition that we're contemplating. And then there's that reliance on imported critical minerals. These have been identified and the risk they pose to the supply poses to national and economic security. Most of the world's nickel, for example, comes from laterite ores in Indonesia, and these are mined, produced at a much higher environmental and humanitarian cost than nickel sulfide sourced in the first world. This is being recognized, talked about now. China controls 80% overall of global critical mineral supply. For nickel, this is 68%. For graphite, it's 100%. They don't even necessarily mine a lot of it, but they own the processing of it. And this is a concern. Greenhouse gas emissions, of course, feed critical mineral demand. So does electrification and the move to electrification. Deglobalization, separate from the green energy movement, is also increasing the demand for minerals. Simply because we're building factories now in the US for chips, for any number of other things, cars. So the US government is actively funding now domestic supply chains for critical minerals to address these risks. And that's one of the key takeaways of our presentation today. We've met with the DoD, we've met with the DOE, and they're very concerned with building those domestic supply chains. Things have been offshored for too long. Now, recognizing the risks involved in that, they are rapidly onshoring the production of these things. Broadly, globally, there is a significant demand increase projected for, we've chosen 3 of the metals here, but really all of those 9 metals that we have at Stillwater, the projections are increased. A little hard to read the numbers here, but the first bar on each of the 3 charts is 2023, the middle bar is 2030, and the final right-hand bar is 2040. Light blue is clean energy, and the darker blue is other uses. Nickel, copper, cobalt, all of them increasing significantly over those, 17 years. And not shown here, the same study details the increased dependence on foreign sources for these minerals. China right now is effectively bullying the world, flooding the market with cheap nickel mined in Indonesia. Laterite ores processed in very carbon-intensive terms. This is a problem for nickel producers globally because they're simply being squeezed out, and we're seeing mine closures. The U.S. government is taking steps to combat this directly, which is well-timed. Recognizing the third bullet there, that there are increasing supply chain risks with allowing China to control the bulk of supply. So let's take a look at the Stillwater district. And within Montana, Montana broadly has been producing critical minerals for a very long time. It was a dominant player in the world copper stage around World War I, about 100 years ago, really. And we're in the south center of the state in the Stillwater district, and this district as well has seen over 100 years of critical mineral production, starting on our ground with high-grade copper and nickel, and then moving to the Mountain View mine you see here on the left-hand side, subsidized by the U.S. government for chrome production. Still, the U.S.'s highest grade and best chrome reserves are in the Stillwater complex. This is one of 3 mines that were active at the time. Our neighbors, Sibanye-Stillwater, world-class operations and world-class mines. You'll see more about them in the next slide. Their Stillwater mill is bottom right here, and their tailings are in the background. Their deposits are to the right-hand side and primarily down and left alongside our big deposits of battery metals. Overall, a district that has seen critical mineral production for a long time. There's a view from above. A second ago, we were looking from the Stillwater mine to the north there. This takes more of a plan view. Our claims are in yellow, and Sibanye-Stillwater's are in gray, and the surface projection of their JM Reef deposit, the highest grade palladium platinum mine in the world, is that thin burgundy colored line that cuts across the screen there. 40 kilometers long, 1.8 meters wide, dipping into your computer screen from where we sit here. It is one layer of a magmatic layer cake, basically, and we have the entire lower portion of that, which is the correct place to find these large nickel copper sulfide deposits of the type that we're finding. The direct analog here is the Bushveld complex of South Africa, and we have bought in 2 of the best geologists in that regard to lead our expansion here in Montana in similar geology. These are rare rocks to be in. We're grateful to share the Stillwater complex with a $4 billion mining company, and it's a very rare position for a junior to be in. Infrastructure is terrific. They run 3 mines, 2 mills, and 1 smelter in the district. And as you can see from the red lines here, we've got good road coverage. You can generally drive to our drill rigs. Taking a look at that lower claim block, the big block that was in yellow there, this is the geophysical survey, 2 surveys actually, chargeability and conductivity results. So you're reading into the rocks to assess their potential. The pinks and the blues here are very high level anomalies that are suggestive of large bodies of sulfide mineralization. It's exactly what we wanted to see. In yellow, set within those, you've got our current 43101 compliant mineral resources, the inventories of metals that we have. This is the 1.6 billion pounds, 3.8 million ounces in yellow. It's actually 5 deposits set very nicely within that 12-kilometer core area, nestled within those high-level geophysical anomalies. We've got every indication that this thing wants to grow and that this is truly world-class stuff. Each of these deposits are open to the adjacent deposit and also down dip. And then you overlay the metals in soils on the surface on top of that. And you see in the pinks and the reds here, very high levels of nickel and copper in the surface, in the soils at surface, which are indicative, again, of expansion potential. Drill results, we have, again, as you saw in that resource slide, we've got we've got high grade within mid grade within bulk tonnage grade everywhere we go. And that's really what's related across that 12-kilometer area there. In 2023, we completed resource expansion drilling off the west end, as shown here, and we've released 3 of those holes to date, with 3 more pending quickly now. We've shown good potential to expand the existing resources. These are the aspirational targets. This is making a leap now to South Africa, but these 2 mines on the Platte Reef, Ivanhoe's Platte Reef mine and Mahalaquena mine, run by Anglo-American since 1993, they're behemoths. They're among the biggest nickel sulfide deposits globally, and Mahalaquena is currently the largest nickel mine in South Africa. Ivanhoe will be when it starts production later this year. Ivanhoe Underground, Mahalaquena is a pit mine, and 8 billion pounds nickel copper in one and 15 billion pounds nickel copper in the other. This is the scale potential that we're talking about. Montana, and it's worth noting that we brought over the head of geology from Ivanhoe 2 years ago to guide our expansion in similar rocks in Montana. There's the resource summary. Again, optionality on mine method here. We're not married to any one mine method yet. We've got high grade within, it's called higher grade here, but it's really mid grade. And then within the base case scenario in the top row, bulk tonnage grade. This is significant global scale stuff. 255 million tons at 0.39% nickel equivalent in the base case, 120 million tons at 0.51% nickel equivalent in that mid-grade case. All of it within tens of cubic kilometers of mineralization, easy for us to expand, low-cost expansion. We think we've grown it with the current drill results, and continued growth is a priority for us in this district as well. You'll also see sulfur numbers there flagged on the left-hand side in the table. This is important because it affects nickel metallurgy. Nickel sulfide is much easier to recover than some other forms of nickel. We're very pleased with the sulfur levels we're seeing, and that fits with the historic metallurgical work that we see at one of our deposit areas. We see positive nickel recoveries. That's splitting out that 1.6 billion pound figure, 3.8 million ounces. We're nickel dominant, 47.5% nickel by value. Palladium is second at nearly 20%, but note that we've got significant copper, nearly 500 million pounds copper. Cobalt, 91 million pounds. It's not in the Congo. This is very significant, and this has caught the government's attention. In addition, we have 2.3 billion pounds of chromium. We've not included that in our valuations to date. However, we have it, and it's critical, and that is also very much of interest. The team, myself, I've been in mining since 1990. It's actually all I've ever done in my professional career. And I co-founded the company. Greg Johnson, our chair, he saw Nova Gold from 10 cents a share to 2 billion in market cap. And that's the playbook that we're following here with the district scale acquisition in the bear market. Danny Grobler is the name I mentioned, who joined us from Ivanhoe. He's at the left there. And he brought a senior geologist also from Ivanhoe, Albie Britz, with him. Very glad to have them join the team. Nora Pincus has been an excellent and recent addition. Overall, you've got a team that's very experienced in building, discovering, developing, and building large projects. And then our industry expertise, the broader picture of our technical depth. We are partnered with Glencore on a technical committee. I can't say enough about the value that's bringing to us. We had a very positive meeting just 2 weeks ago. We're very much aligned on the growth potential we see at Stillwater. We've been partnered with the U.S. Geological Survey for over 6 years now at Stillwater, and they are the gateway to the critical minerals list with the U.S. government and U.S. government funding in general. We're looking at carbon sequestration, hydrogen production. We're working with Grishma Gadikota, as the picture shows here, under a DOE grant, Cornell. And this all adds technical depth to our work. Our share price has performed much in line with our peers and with the broader indices of our sector. We're up nicely just recently. We've got a long way to go back to where we should be. And frankly, I think the rising tide that floats all boats could take us 2 or 3 times higher, even if we don't advance the project at this point. It's nice to see some interest starting to return to the sector, and I think the worst is behind us. We closed a $3.9 million placement led by Glencore just earlier this month, and that has us positioned nicely for growth this year. Market cap currently 41 million Canadian, and that's with 20 billion US in gross metal value in the ground. Shows some of the disparity and the value potential, the upside potential that we see broadly in this sector. Glencore is currently 15.4%. Management insiders, including myself, are about 20%. High net worth institutional retail make up the rest of the chart. And we have a good shareholdings in Heritage Mining as they advance our gold project in Ontario. We've been on the ground now for 7 years. We've drilled 4 campaigns, issued 2 resources, brought the two senior geologic mines from Ivanhoe to guide our further expansion. And we brought Glencore in as a significant strategic partner. That's a lot. That's quite an accomplishment in the past 7 years. We're quite proud of that. What's next is additional drill results, updates on our non-core projects. We are looking to sell these broadly to get value for them. After that, resource updates, our 2024 expansion plans, and those will start to include PEA level thinking and metallurgical studies behind that. This is now, we now see a 10 to 20 year mine life potential at Stillwater. So in that sense, we're big enough to start putting some mine thinking around this, and you'll start to see us work that way, in addition to growing the project based on the terrific expansion potential that you saw. And then U.S. government. I met recently with all 4 federal politicians from Montana, very positive meetings. We're looking forward to more in that regard. That's it for the formal presentation. I'd be glad to take any questions.
Great job. Thank you, Michael. Okay, we do have some questions for you. Excuse me. So you mentioned seeking U.S. government funding. So it's a 2-part question. So where would you say you are in that process? And what does the competition look like in the States and elsewhere?
Well, there isn't really a competition, because there are literally 2 nickel projects in the U.S., and one of them has already got funding under DoD Defense Production Act, Title III. That is Talon Metals. They're friends of ours. They're working in Minnesota, which is a more difficult place to work. That sort of paves the way for the first part of the question, that we've had very good conversations with these people. I've met, as I mentioned, with 4 federal politicians from Montana. And that DoD Defense Production Act Title III does seem to be the preferred channel, especially for drilling and mine-related work. So you'll see us work actively in that channel. I can't comment on timing. These things move at government pace, but we are in the process, and it does look positive. They have now written something like half a dozen checks for projects at our stage and later. So I would say that's favorable. Other funding is possible from the DOE and Department of Interior. They're generally focused on earlier stage stuff such as geophysics, or later stage stuff such as processing and beneficiation. But we are well in the process, and I've been flying to DC a lot these days.
Mm-hmm. Interesting time. Where would you like to see the company in a year or two?
Well, higher valuation would help. Markets have not been with us, but that's the value proposition that we present here. We see terrific potential here as America's largest nickel project in an active mining district that's being recognized. We can grow this very quickly based on the neighboring production by Sibanye, based on the U.S. government's appetite for domestic supply chains. I would even throw in there that we can add hydrometallurgical processing and some sort of a super center of U.S. critical mineral supply in Montana, or perhaps in a neighboring state based on ore from our world-class operations at Stillwater. We're in very large geology. We have a scale that our peers can't touch with that 40 kilometers by 8 kilometers of the Stillwater Igneous Complex. So where would we like to be in a year or two? We see great potential to advance that substantially, especially as the market starts to get behind us.
So what does production look like for Stillwater once you are there? Will you sell, partner, outsource, or can you produce on your own when the time comes?
It would be unusual for an explorer developer such as us to enter production, especially at this scale. It is more likely that production would be taken on by someone like Glencore, perhaps another major, perhaps even involvement from Sibanye next door to us. They are mining about 2 kilometers from us underground, right? So their infrastructure could be very relevant to what we're doing at Stillwater. So in that case, it is very much us bringing in a senior partner to take this to production. I could see that happening within a 2 to 3 year time frame. It's obviously subject to markets and results and continued growth of the project, but I don't see any barriers to that at present.
And do you have any concern that Glencore might take over?
Well, there is an aspect of dating before you get married here, as the saying goes. We have been careful to keep control of the asset. And there have been a wonderful 15% shareholder now for the past month, 9.9 before that. Ultimately, they may be the best partner to take this over. It's a matter of the terms that happens on. And I'll just note that Glencore has been very upfront with us that this is not what they do best. This kind of growth and de-risking is actually best done to teams like mine. They would be the ones to build the mine, right? We're the ones to de-risk it and advance it and grow it. And they know that.
A few questions concerning your timeline. Talk a little bit about that timeline on the feasibility studies you're expecting.
Sure. We would be glad to. We are looking at PEA level studies. That's the first stage of feasibility. Later studies are contingent upon that first stage result. I could see all of that being completed inside of a few years.
Okay. And without tariffs placed on foreign critical minerals, when you get there, can you compete with production costs?
What's attractive now is that it's becoming more. Production costs are less of a consideration. China is flooding the market with cheap nickel, for example, and many of these are loss-making operations, but they are bullying the marketplace and they're trying to squeeze out Western producers. There has also always been the imbalance of environmental standards, humanitarian standards as well. These things need to be recognized. The LME Metal Exchange is under pressure now to recognize the two different types of nickel, the one mined from laterite ores at great environmental expense, orders of magnitude greater carbon footprint for this nickel, ironically, which goes into EVs. And then nickel sulfide mined in North America, for example, some of the stuff out of Voisey's Bay, Canada, high grade with hydroelectric power, sulfide ore, you can get down to 4.4 kilograms of carbon emitted per kilogram of nickel. That's 1/20th of what Indonesia can do. So this is the cleanest stuff in the world. And this is the general education that the industry needs to do on where your materials are coming from and what the price is. The dollar price is only part of the equation, is the point. The scale we see at Stillwater, just to answer the original question, the scale we see at Stillwater is affords us economies of scale in production. So it's too early to say what type of mine we'll be doing. We could go underground high grade, which is greater cost, much smaller footprint, but block cave looks possible from what we see, especially at Chrome Mountain. We're starting to get the dimensions of an emerging ore body and a mine plan around it that might support block cave. This is a very low cost way of bulk mining underground and could be very attractive.
Well, Michael, we are out of time. I want to give you just a quick second to give our viewers some closing remarks.
Well, thank you. It's been very good to see you again. Thank you for joining us. Please reach out to the company with questions, comments. We're always happy for that feedback. And please do consider taking a position in a company, if it's not Stillwater, something that has been vetted by a major and is showing a pathway to production in a first world jurisdiction like this. It's the right time to be looking at commodity investments broadly.
Absolutely. Thank you so much for the support and work. And we hope to see you again in the future with some more updates.
You bet. Thank you.
All right, everyone, stay with us. We'll be right back.